I'm just going to go ahead and first of all explain what our general approach to counter-tax support modeling is. And I'm then going to move on to a few examples of work we've done for different local authorities, so you can really understand what it is we're talking about in practice. In terms of our approach, what we do is we use your household level data. So this means basically housing benefit data or counter-tax support data to model the current scheme that is in place at your local authority to a very high degree of accuracy. And this is not an issue because all local authorities hold this data and it's standardized, so it's very easy for us to get hold of that and analyze it very accurately. Once we have modeled the current scheme in place, then we can model different changes to that scheme that you may want to look at, and we can combine that with the effects of welfare reform and the rollout of universal credit. And finally, once that is done, we can then move on to show you the effects of different schemes that you're considering. So, for example, for each scheme, we can tell you who the winners and losers would be, what the effects would be by tenure, by household type, or by economic status, like Paul mentioned just a minute ago. And generally, we can tell you the strengths and weaknesses of every different model that you're considering, and perhaps most importantly, what the overall cost would be of these schemes. I'm going to move on to talk about one early example we have of work we've done on this. This was a project we did for North Hertfordshire Council, which is a relatively small local authority with few claimants of counter-tax support at the moment. And their issue was quite interesting because in their case, they were very happy with the way their counter-tax support scheme was designed. They were happy that it was helping the people who needed most help. The only problem is that they were underspending. They were predicted to spend about £500,000 less than their budget in the coming year. So they came to us with the question, how much can we afford to increase our support by? And of course, the tricky bit of this was that these were the times when the tax credit cuts had been announced in the summer budget. And of course, before the Chancellor of the Exchequer completed this U-turn and said that the tax credit cuts would not go ahead. So at the same time, there was also the fear that if tax credit cuts lowered the income of people who are claiming counter-tax support, it could also drive demand up for support. So they wanted to take those two factors into account and see exactly how much they could increase the support by. And another key thing that they wanted to model was if they made the counter-tax support scheme more generous, it could mean that people who do not currently claim counter-tax support would begin to claim it or would become eligible for it. So they also wanted to make sure that we took into account the fact that the caseload could increase if the scheme were more generous. So I tried to put this challenge into a more visual pattern, and what you can see here is essentially what I explained just now. The council was spending below their budget, so they wanted to bring their expenditure up. At the same time, they were worried that as tax credit cuts brought claimants' incomes down, people would be entitled to more counter-tax support, and this would bring expenditure up naturally. So they wanted to find essentially the ideal point where they would increase support to spend more of their budget, but this would not bring them above their budget if you take the tax credit cuts into account. And in terms of the work we did, we modeled their current scheme very accurately. Then we moved on to model what the situation would look like if the tax credit cuts came into place this year, because they were scheduled for next month, I believe. And we were then able to remodel their scheme at higher levels of support until we reached that optimal level that I was talking about, which is the point where the council is using most of their budget, accounting for welfare cuts, but at the same time not in danger of overspending. We found two key things, I think, here. The first one is that actually the effects of the tax credit cuts on the counter-tax support scheme would be relatively limited. This is in part because people who claim counter-tax support don't usually receive tax credits, So the effects would be limited in this sense. And then the other thing we found was basically the answer to their question, which is that they could increase their support for non-protected working age households by about 12%, and they would still have a financial cushion for unexpected changes. So we found that 12% was the ideal increase. They could potentially increase it a bit more, but that would put them in danger of overspending. The next case I want to talk about is Leeds Council, which was actually one of the first council tax support models that we ever did. And here the challenge was quite a bit broader. The council wanted to future-proof their scheme for the different welfare reforms and for the rollout of universal credit, which were just around the corner. And in addition to that, they also wanted to make sure that their council tax scheme was fair for everyone, taking into account that welfare cuts were going to hurt many different people. So the goal was to make sure that the council tax support scheme did not hurt those who would be hurt by other government reforms, unless absolutely necessary. Another area of focus for Leeds Council were work incentives. In this sense, they wanted to see if their council tax support scheme could encourage people to move into work or to work more hours and reduce their dependency on benefits. And finally, they also wanted to reduce their payments of council tax support and invest more money and more time on other forms of support like face-to-face time with residents. So what we did was this. We modeled 5 different schemes that the council wanted us to look at. And we evaluated essentially the winners and losers of each scheme. We graded the schemes on 4 different categories. The first one was work incentives. So in other words, does this scheme encourage people to move into work or to work more hours? The second one was financial cost. So is this scheme expensive? Could it bring the council over budget? The third one was political cost, which is understanding whether a particular scheme could be challenged by voters and residents in general. And finally, we also looked at the administrative burden, which is whether any particular scheme would have high administrative costs, particularly when it comes to means testing, because we all know that means testing a council tax support claim is very costly and very time consuming. And the schemes that we modeled were quite varied. I think some interesting ones included, for example, removing protections for disabled households, so that if a household was receiving a disability premium, they couldn't receive 100% of their council tax bill in support, but instead a bit less. Another example would be the DCLG scheme, which integrates better with universal credit. And a few interesting things that we found when doing this modeling, firstly, I think, was that financial work incentives were really hard to apply in a council tax support. So even in the most work incentive friendly scheme that we modeled, the financial work incentives were actually quite small. And this is simply because out of all the benefits that a claimant receives, council tax support is actually usually the least important one in financial terms. So it's really hard to apply financial work incentives through council tax support. However, a different question is about whether if you save money in payments and invest more time and money on face-to-face interactions with your clients, you could improve work incentives. And in terms of what Leeds received at the end of all this modeling, they received a report with an in-depth breakdown of each one of the 5 schemes, so that then they could send the recommendations to members, taking account of the local situation. So in other words, Leeds were able to make a more informed decision on a subject that would affect tens of thousands of people. And finally, I'm going to go a bit more in depth into the work we've done for Newcastle City Council, which was a more recent report that we did. Here the challenge was quite broad. The council wanted to cut expenditure on council tax support payments to be able to support residents in other ways, a bit like Leeds. They were also worried about the fast rollout of universal credit, because this was challenging the current scheme. Administrative complexity was another concern, and so were arrears. Both administrative complexity and arrears meant that the council was having to spend a lot of money means testing and processing claims and also trying to collect arrears. So wherever possible, Newcastle wanted to cut administrative costs and also to reduce the levels of arrears. They asked us to model 6 different schemes and see which one of them covered all angles better. So what we did was indeed model the 6 different schemes, accounting for next year's increase in council tax rates. And we analysed each one of the schemes in terms of, a bit like we did with Leeds, work incentives, financial cost, administrative complexity, political risk, and here we added an additional category, which was arrears. And the intention here was to figure out whether each different scheme would carry with it a risk that arrears would increase as a consequence of claimants losing support. And other modelling that we've also done includes, for example, making an assumption as to how fast the rollout of universal credit is going to go and how council tax support claimants who transition into universal credit will receive more or less support in financial terms. In terms of the specific schemes that we modelled for Newcastle, initially there were 6. First of all, there was a no change scheme, which was simply leaving the current scheme as it was for next year. The second one was the current scheme at a higher level of support. If I remember correctly, they wanted to increase the support that claimants could receive from 80% of their bill to a maximum of 85% of their bill. And the goal of this was simply to understand the cost implications of giving more support to claimants. The third one was removing protections so that households in receipt of disability benefits would no longer be entitled to up to 100% of their bill in support. The fourth one was what we called a self-employed workers scheme, and this simply means applying the minimum income floor to self-employed workers. So for example, if a self-employed worker tells me that she's working 16 hours, but she declares very low earnings, we would assume that for each one of those 16 hours a week, she's earning at least the minimum wage. And we would means test the council tax support accordingly. The fifth scheme was an administratively simple scheme, which is one that Paul mentioned earlier. And this one involves creating different income bands and saying if your income is between X and Y, you can receive 80% of your bill of support. If your income is between Y and Z, you can only receive 60, and then so on for 40, 20, and nothing. And this one is particularly useful for universal credit because, as you may know, under universal credit, all you're going to see is a particular claimant's universal credit payment, rather than seeing their housing benefit, their job seekers allowance, their tax credits, and so on. So you're going to have to decide whether you want to take all universal credit income into account or nothing. And the administratively simple scheme takes care of this. And the final scheme that we modeled at first was a work incentive scheme, which again is basically the DCLG proposal to merge this into universal credit. You'll see that there's a number 7 in there that's a hybrid. I'll go into that a bit later, but at first we only modeled 6. And these are the conclusions that our analysis reached, expressed in a table. So as I said, we saw each one of these models in terms of work incentives, financial cost, administrative cost, political risk, and arrears. For the no change option, which was keeping the scheme as it was, it had no major consequences either way because it was keeping the status quo. However, the council wanted something better, so this was not the ideal option. Then there was the option of higher support. This, of course, would have no political risk because most people would be happy to have more support. It would improve the arrears situation, but it would have a negative consequence for the council in terms of financial cost because they would be spending more money. Then there's this scheme of removing protections for disabled claimants, and this is basically the inverse. Financial cost would go down because you would be offering less support, but this would be a tricky scheme to implement in terms of political risk because you're hurting disabled households and in terms of arrears, because many more people could accumulate council tax arrears. The self-employed workers scheme we found would have almost negligible effects. This is mostly because there are simply very few self-employed workers in any council tax support caseload. So even if you ask them to pay more of their bills, it's going to have a very small scheme, a very small effect in the grand scheme of things. The administratively simple scheme would have a very positive effect on administrative costs, and it would also be relatively good in terms of political risk, because people would have an easier time understanding what the council tax support scheme implied, and that's always a positive. However, it would have a net negative effect on arrears. We found that more people would fall behind with their council tax payments if this scheme was implemented. And finally, there's the work incentives, or the UC integrated scheme, which would have a positive influence on work incentives. It would be cheaper than the current scheme, but in terms of political risk, it would be quite bad, because it wouldn't integrate very well with those claimants who are still receiving the current benefit system, and it would have a negative effect on arrears as well. So to kind of bring this all together, what Newcastle found was that no scheme is perfect. All schemes, as we see in this table, have strengths and weaknesses, so which one is chosen is likely to be a political decision more than anything. And this is going to depend largely on the council's priorities. What Newcastle agreed to do here was to create a bit of a hybrid of two of the other schemes, because they saw that the scheme that removes protections for disabled people would have positives and negatives, and so would the one that offers higher support to working age households. So they asked us to bring those two together and run a hybrid where disabled people would no longer be protected, but support for all working age households would go up from a maximum of 80% to a maximum of 85%. And here they reached the conclusion that this was probably the ideal scheme for the time being, because some of the negatives of one scheme would be counteracted by the positives of the other scheme, and vice versa. And I think this shows how flexible our system is, because we can really play around with different schemes and different options, and we're very flexible in terms of doing what you want to see, and we give you the opportunity to just be creative and tell us what you want to see in your council tax scheme, and we can tell you the effects of that.